Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bang, bada boom, we go into the charts. Okay, so 2 12-hour candles later, we did get that push up to that pool and rejection. As we thought, we were putting out higher time frame ABC waves to the downside, and within that an ABC to the upside. So the ABC to the upside completed itself with a little fade down to some levels here at 27,450. Let's go ahead and take a look at the high block liquidation levels. So what is high block? Well, people lock their liquidity into the charts to get burnt to a crisp. We're not using a stop loss, and we can see where those crispy characters are. And also they do that after listening to YouTubers who draw fake trend lines and patterns and bull flags and trap their audience. So we get to see where that audience got trapped. So let's go do that now. So, as YouTubers last night put out bull flags and projections to 30K and beyond, they trapped their audience into these 100x projections after selling them leverage courses, and their audience got trapped in pools of 96 million, 99 million, and 100x, and then gobbledygook, they got taken for a ride.
Fatality.
And then their 50x brethren, who thought they were sly to put their stop losses down here, also got turned into gobbledygook as they drew 1 minute inverted head and shoulders and all this bull crap because they don't know about ABCs and consolidation waves, which lead to deeper retraces as they trap more traders.
Fatality.
And then finally it settled down below at the 2734 region and finally gobbled up these pools of longs, and now we're going sideways. And watching the shorts kind of taper here, the degree in which these 200 million pools up at 28,157, which we had outlined for you, have tapered to the tunes of 81 million here. So the shorts a little bit fatigued or already in trades or knocked out. Still imbalance to shorts to the tune of $4.8 billion on the 1 minute time frame. Let's go see if the retrace to the upside is inbound for Run for Profit Friday, October 6th, and going to the higher time frame pool of the 7-day. We have still an imbalance to the downside, suggesting coming below 27K. And if we go to the monthly, as we suggested yesterday as well, imbalance to the downside. We said there wasn't much above 28K, so coming back down beneath that, you got about 6 billion down at 27K, 10 billion if you put them together, and even lower at sub 26. It could take its time to induce its liquidity all the way down too, so there's no need for it to drop just immediately. But overall, the draw is to the downside on the 3, the 6, the monthly, the 3, actually the 7-day, the monthly, the 3, the 6 month time frames all have this lower draw to 24,176 million. How on earth a YouTuber could put out a 30K projection when there is no liquidity there shows a lack of understanding of basic liquidity and math. So $261 million down at 23.6, 100 million up at 30,800, but there's nothing to justify going up there. There is a 29K, $42 billion pool, I suppose, on the 2-year time frame. Let's go back to the monthly and then go into the math and bid you adieu. I'm going to Ghibli Park. If you don't know the Ghibli movies like Mononoke Hime, and they have a nice little park where I will be taking my daughter and some of her friends. So a nice little outdoor getaway. We have a food planned and everything as well. All right, so let's go into the charts for BTC. So check this out. Yesterday's live, we were about here. We were calling for it to come up to here, at least some more. Get rejected off the golden pocket or this pool. It got rejected off that golden pocket 0.66 level, and boom, sharply reversed on those audience of the bull nature, the bullish tilted audience members. All right, ooh. Let's go ahead and throw on our momentum. What is this little bit of happiness, you say? Well, the link is in the description for more, momentummaster.info. Scroll down to features, toggle everything as you see at Bitcoin's bottom, or read about each component as it comes into prominence, like the trend cloud and the baselines. As it stands right now, you're starting to get 6 time frames oversold by the looks of it. Cloud on the hourly, which was insinuating the continuation of the upside. We kissed off the cloud, continued as we said, played out, and this pool has basically been requited but not quite, so I guess we could leave it alone. We'll leave it alone for now. All right, so where does it go from here on Run for Profit Friday? That is the question. So we're fading off of the 4-hour cloud. Let's just make our descent through the time frame, shall we? Getting an entire rejection wick off of this 3-day, which is going to close in a day now, over the weekend. We were talking about overall this ABC to the downside on the 3-day because of this bearish retest of this cloud, which is fading. Most people don't see this cloud because most people don't have Momentum Master, so they don't get to see this volume fading and shifting to the downside. Also holding the bearish super trend on the 3-day. Cross-up event of the baselines is something to show this support until we can start getting beneath these 786 levels and below and start to see this baseline cross down on the 3-day. This could just be a simple retrace for a double bottom to the upside. So don't get it. Nothing is guaranteed in this C wave at all, but the fatigue point at the B and the cloud is something to think about, which is why we are looking at that potential fade up in that liquidity zone, which we got. And then now we go to the daily time frame. Daily time frame stochastic starting to come down here. Money flow and RSI also coming to the 50 level. Williams starting to cross down for a reset perhaps, or a kiss to the cloud down in the 786 region with the vector candle recovery down here. Coming to the 22 now crossed down in potentially retracing further down now. Starting to reset the stochastic here, but money flow extremely disparate between the RSI and the money flow. So coming down further for a potential reset of the 22 some more. Getting that cross down event on the 12-hour locked in, so beware of that. The 12-hour does give with it some fury to each side of the cross down events. So we got a cross down event locked in on that. 1 hour and 50 minutes for that candle close coming into the daily. So this last leg of 12-hour reset could be a doozy for downside. Looking at the 6 hour, 6 hour also starting to get that double bottom scenario suppression of the 12-hour now cross down. We had a cross down event during this B wave we were talking about. Trash consolidation equals B wave to the downside. So we could be seeing this break of this 6 hour cloud. If it suppresses and closes beneath the cloud, watch for a bearish retest continuation into the 12 hour. As of this moment, you could get a bounce off of the super trend levels at 27.1, so far holding since Thursday of last week. Let's go into the 4 hour. The 4 hour broke that super trend yesterday, but managed to maintain the cloud all the way up to that pocket level. Rejection off the golden pocket, coming back beneath the cloud here with volume present to that downside path. So candle closed beneath the cloud with volume, suggesting that that run up on the cloud is kapooey for the 4 hour time frame. Starting to get this curvature, insinuating that this could be over here, and starting to see that cascade into the 6. In a similar fashion here, we had a sideways consolidation leading to another dump like this. Boom, boom, boom. So is this little bit of happiness here, this consolidation, leading to a further break of this consolidation into a C down into the 786? We're here for it. Liquidity pool down at 26,568 at the 786 here for the impulse. Would make sense to continue down here. Starting to see that narrative begin to unfold. As you go into the hourly, the cloud also started to thin here, so even if you do manage to come up within this small structure, you could still be coming down within the larger. And you see how the impulses and the retraces all complement and juxtapose one another. No need for patterns, it's all energy waves and oscillations, trapping liquidity with momentum using the math, the 3 pillars of trading. The patterns arise from that, and if you're seeing the pattern, you're already too late in your entry. Alright, so, or you're being trapped as the liquidity to the other side, as was the case yesterday when they put out their bull flags into resistance like that. And their cup and handles and all that fun stuff. So the 15-minute putting the cloud kibosh down here and possibly coming lower in this last 15-minute candle, some volume stepping up to the plate as we continue to break certain levels coming beneath the adaptive here. This is turning possibly into resistance as we drop lower. Let's go ahead and see. Hey CNC, how's it going? $15-minute coming down here. So the 15 minutes starting to make its push. Now we are getting the 6 time frames oversold, so at some point a potential retrace back up could be in order, but you have a bunch of vectors in these candles too, but I would expect without the C wave obliterating their account. This is why the ABC is so important. So, you know, putting it in terms of liquidity, okay? So you have little like traps within traps, right? So you have people looking to go short here, and then they get obliterated, and then they actually reverse it and they trap a bunch of longs in here, and then they go down here. After trapping the longs, they give them a chance to get out for a minor loss or dollar cost average, and then they obliterate their accounts down here. So these traps, the B waves, are the traps. These are the traps that take out the people that are trapped up here. So there's longs that were trapped up here. They get taken for a ride and they will never see their entry again. So this B wave, you would not want to play the B wave because that's just giving them the false impression of upside to obliterate their account. So coming back to price action, we had one A wave down. So all of the audience members of prominent streamers who got sold the idea of upside basically got taken for a ride, and now they're consolidating, giving them this false impression of a bounce. I mean, it could come all the way back up to here. It depends on how much they dollar cost average. I don't know. Maybe they'll get out at break even. But the rejection of the cloud, they come up to here and then just come further down. Down, 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 down. And then at that C wave, then when you sweep all these lows and all these lows and obliterate a lot of longs, that's when you can be thinking about possibly getting a little bit of a bounce to the other direction. I would say this wave theory is more accurate than any type of pattern, because it's installing the idea of what liquidity is trapped and what they're hoping for with that trap being set. So where the strength to the move would be. So you have like shift, pullback, continuation, right? Strength into strength. So that is the 15 minutes starting to come down here, leading into the daily. So let's go back to what the daily looks like in terms of a candle here. So the candle is kind of a bearish engulfing of this previous day, slightly below where the previous day took us, including with that wick all the way up there. That's a big bearish trap set right up there. So the run for profit to the downside looks like it could be the play here. Starting to get that drop now, not even getting the rise here, just straight downside. But if you were to, you would be getting that rejection up here just to be frugal. So even if it does trap some premature breakout trading shorts, and use the liquidity to rise and stop out more shorts in this vector. There's a vector candle over here. So it could go all the way up to that level, 27,649. Let's go see. Let's do the diligence of where the 100xers are, to say the least. Zooming on in. 27,607 has 84 million. 27,607 would put you at the vector recovery here, so that makes sense. Not saying it will bounce, but if it does, that would be your fatigue point. If you're already in the short, you could rest easy and put stop losses above this zone, perhaps. And coming down to that pool at the 786 would be a cool place to recover liquidity, I think, for a run for profit Friday. All right, ladies and gents, that's about it. That's my story, and I'm sticking to it. I don't really have much time to go into the total today, but that could be your longer term scenario going on. We're approaching the weekend. Coming down to this zone would make the most sense. Watch that 236 at 26,994 for the bearish idea of this impulse retrace. The true 236 zone would be something to think about before we come down to these regions. Okay, well, that is my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you for NQ Futures for New York